A hearty welcome to the return of the program, everyone. Wishing you everyone a wonderful day. Those that own Bitcoins don't know what's coming, but you know what? So does the data. At this particular juncture in the cycle, XRP is the sole asset with a legitimate shot at becoming monarch. If you believe this is just hype, you should wait till Wisdom Tree releases their numbers. And we'll begin precisely at this point. Instead of avoiding or downplaying it, Wisdom Tree made it front and center. Their words were unfiltered. If XRP were to double from its current price, it might become Bitcoin's inverse. One of the world's largest institutional asset managers has come out and pointed out a mathematical flaw that Bitcoin proponents refuse to acknowledge. Out of all the assets they might have highlighted, why did they pick XRP? You do realize that there are thousands of cryptocurrencies? Reason being, Bitcoin is only holding its position as XRP experiences a historic shift in the crypto industry's architecture, liquidity railroads, and regulatory trajectory. That 20x prediction becomes look very cautious when you combine XRP's historical cycle pattern with the macro structure of 2025-2026. No, XRP isn't making up ground here. In other words, XRP is finally fulfilling its intended purpose. If you're following along without a comprehensive plan for the XRP cycle, you're basically blind. So pay close attention. Also, being clear is crucial when dealing with a massive cycle like this. For those who prefer to get a head start before the masses awaken, I have designed a specialized tool. The XRP Millionaire Blueprint will teach you to think like the top 1%, position yourself for life-changing fortune, and arrange your crypto cycles the way they do it. It dissects the methods that lead to division. See the pinned comment down below for the link. The real action begins when you step back and examine XRP's behavior across different cycles, so let's lock on now. It seems like everyone can't get enough of the idea that XRP was too late to ride the bull run. Nothing was missed by XRP. XRP ended the most recent uptrend. Here is where investors lose sight of the asset's true movability. If you go back to 2017, XRP was woefully underperforming the whole year. It went unnoticed. Many made fun of it. I heard it was done. It remained motionless as all around it changed. In the last lap, just when nearly everyone had mentally tuned out, it went off. Triple-digit increase. The stock market saw one of the largest single-day movements in history. It was the last thing to move, not the first. It follows that pattern. Examine the framework from 2024 to 2025 now. From last year's October to this year's January, XRP was constantly moving. From large exchanges, it ripped at a rate of 5x to 7x. With the recovery of liquidity and the arrival of legal clarity, mainstream platforms saw gains 3 to 4 times larger. There was a pattern to that November-January explosion. There was no sound. This XRP blow-off was typical of those at the end of cycles. So what followed? There was a 25 to 30% cooling of XRP. 20 to 25% of Bitcoin's value decreased. Total market capitalization for cryptocurrencies fell from $4 trillion to around $3 trillion. Money became more scarce. Hopelessness set in, a stealth reset, not a rumbling bull. The same cleaning up process that in 2017 laid the groundwork for XRP's tremendous surge. The majority of people aren't paying attention now. The XRP to BTC pair. This is the first time it has shown signs of a possible monthly breakout since XRP's biggest run ever. And XRP doesn't merely surge when that ratio turns around, historically speaking. It gets going. This is the identical conclusion that every single statistic, pattern, and macro setting arrives at. There was no bull run in 2025. The reset had occurred. There was a $19 billion loss in longs on October 10th alone. The market felt revitalized. We wiped out leverage. And now XRP can take the lead in the next cycle rather than just following it. All right, let's focus on the present moment. Reason being, this approaching week is jam-packed compared to any other week of the year. The Federal Reserve has several speakers. On the 19th, the FOMC comes into play. Critical labor statistics will be released on the 20th. Global markets reposition quickly during these exact windows. At times like this, volatility inevitably surges. Here, though, is the part that the majority of individuals fail to notice. Assets with solid liquidity rails, established institutional on-ramps, and actual usefulness tend to do better in times of macro instability. Underneath the surface, that is precisely where XRP is making weekly progress. That change is being signaled in large part by ETFs. Simple black and white. Knowledge tree. Everything is unfolding at a breakneck pace. The debut of Frankie T is scheduled for Tuesday, the 18th. Bitwise has set their sights on either the 19th or the 20th. The 21 share and coin share prices collided 2 days later. Later that month, around Thanksgiving, Wisdom Tree and Grayscale will be added to the list. The number of spot ETFs in a month is 7, forecasts only. Rather than aspirations, not assumptions. All of these issuers are simultaneously opening XRP exposure and managing trillions of dollars. There has never been a coordinated ETF launch like this for Bitcoin. Ethereum also failed. This is real-time coordinated infrastructure construction at a still compressed price. And whenever XRP's infrastructure has grown under a covert price, the consequences have never been negligible. The Bitcoin community is finally starting to feel the heat, just as predicted. Emails linking an Epstein-affiliated fund to early Bitcoin core development have recently come to light. Keep an eye on how quickly certain individuals attempt to change the subject. Tribalism rises as a storyline falters. People become more defensive. Higher levels of distractions are observed. Whenever that happens, it means the tide is changing. Something even more intriguing is occurring on the charts, though, as that noise spreads. A death cross has been printed in Bitcoin, a crossover between the 50-day and 200-day moving averages. Many see it as a warning sign. Bitcoin, however, has a history of falling into this cross and then recovering by a factor of 70 to 200. It is precisely during that rebound that cryptocurrencies have typically performed better than Bitcoin. In the past, XRP has accelerated during Bitcoin's rallies, slowdowns, and stabilizations. The biggest ratio breakouts for XRP have occurred there. Now that institutions are fully engaged, the setup is considerably more robust. The Secretary of Commerce has gone on record as saying that he buys Bitcoin whenever its price drops. You can see just where we are from that. No, this isn't a peaceful period. Investments in digital assets at the level of sovereigns are being made here. Because XRP ETFs are built for settlement at scale, low, rapid, and regulatory ready, that same capital will eventually move into them. You can see for miles. However, the true picture becomes clear when you widen your view. The distribution of wealth across the world reveals everything. You own $120 trillion worth of stocks, $140 trillion in guaranteed income, $250 trillion worth of property. There is $100 trillion in M2, treasure worth $30 trillion in gold, and Bitcoin worth less than $2 trillion. Bitcoin is just a small pool in that vast ocean. Near the puddle, there's a droplet of XRP. But that's not all. Those trillions can enter the cryptocurrency ecosystem in a legally compliant manner for the first time ever. ETFs, sovereign wealth channels, pension flows, institutional allocation models. For assets that are practical, have high throughput, and are clear on regulations, these structures are designed. At that crossroads, XRP is sitting. That is why the CEO of Bitwise made the statement that stunned the market. The 4-year halving cycle paradigm, he claimed, is from a bygone crypto period. The entire structure was altered by the ETFs. Novel participants, novel drives, novel patterns of fluidity. Based on his analysis, it appears that we are currently emerging from a mini bear market that may have lasted for 6 months. Also, he is correct. When an asset has a spot exchange-traded fund, ETF, the traditional multi-year bad markets become much more manageable due to the regular input of cash. New demand is continually coming in. When money flows into several exchange-traded funds, ETFs, from various issuers, the floor rises, falls are bought faster, and cycles tighten. The whole XRP setup appears extremely different from what most people think once you grasp how the liquidity structure and macro timing windows align. This is where everything comes together. Now is the time when global capital is simultaneously repricing risk across all asset classes. When that occurs, assets that have more streamlined regulatory frameworks, more integrated financial systems, and quicker settlement railroads will benefit more than others. This degree of institutional alignment is unprecedented in the history of cryptocurrency. Not only that, but XRP is unique among assets in that it conforms to the pattern that large financial institutions are following. The focus here is not on sizzle. Infrastructure, liquidity, and timing are the key factors. Since the earliest signs appear during liquidity cycles, it is where you should begin. In the past, when markets around the world became more restrictive, investors dumped risky assets and liquidity dried up. We can all see that coming. The rebuilding phase, however, is crucial since it is during this time that liquidity begins to re-enter the system. It does not spread uniformly. Those assets with the most obvious practical applications and well-established distribution channels receive it first. Leadership is born from that. Now, more than any before, ETFs have established the most transparent pathways for cryptocurrency. The initial gainers were Bitcoin and Ethereum. When XRP's ETF selection is fully operational, though, those inflows will be more than simply curiosity. A new baseline demand will be created by them, one that has never been before in any cycle. People overlook this structural difference. Every time XRP had a rally in a previous cycle, retail momentum was crucial. Banks were unable to go forward due to a lack of regulatory certainty, institutions were marginalized, and liquidity on exchanges was fragmented. Regardless, XRP experienced its biggest ever moves despite all that. Things have changed drastically in this new setting. In the span of a single month, 7 different ETF issuers have begun preparing. In order to be ready for settlement flows, you have exchanges that are expanding liquidity corridors. Through collaborations, pilot programs, and understated infrastructural investments, financial rails are being linked. This is happening at a time when investors are shifting their focus away from tech, which has become too vulnerable, and towards settlement assets and alternative value storage. There is pinpoint accuracy in the timing. But that's not all there is to it. You must have a detailed framework. Furthermore, the current technical structure of XRP is very similar to the conditions just before the breakout that preceded its biggest historical runs. Continual consolidation, reduced volatility, falling volume, and a narrowing range. There is no sign of weakness here. These indicate that there is increasing pressure. The final move is in a minor breakout when strong pressure builds inside a range that spans multiple years. This change is fundamental, and the first indication of that change is seen in the XRP-BTC ratio. There has always been a critical ignition point at that ratio breaking upward. Here we are at the tipping point where money starts to flow away from Bitcoin's consolidation and into assets with more upside potential. Rotation is reforming according to all current data points. However, XRP is now faced with a new challenge due to the macro situation. Typically, altcoin rallies would follow Bitcoin's big surge, cooling down and subsequent sideways drift. The opportunity for alternative coins to thrive was therefore created. Institutional investors did not pour money into altcoins during that window in previous cycles. Retail sales generated capital. Now, even institutional investors use the same window. Altcoins that meet the criteria for ETFS, clear regulation, banking compatibility, and settlement utility are not merely riding a wave of residual momentum. They are truly making waves. Structured capital is pouring in from all over the world, from people who have never invested in cryptocurrency before. In light of the capital rotation methods employed by sovereign wealth funds, this takes on much greater significance. These budgets function according to risk classifications. Cash and bonds make up Tier 1. Blue chip stocks and gold make up Tier 2. Venture and developing assets make up Tier 3. Due to ETF wrappers, crypto is now categorized as a Tier 3 asset class, which is a first. That opens the door for XRP to get funding from other sources, including insurance companies, pension funds, retirement systems, and global financial institutions. These organizations aren't pumping cash into arbitrary coins. They distribute funds according to the dependability of settlements and the clarity of regulations. In this particular market segment, XRP stands out the most. The utility story loses its theoretical underpinnings at the real-world adoption layer. So let's get there now. There hasn't been a more significant technology revolution in cross-border settlements since the creation of SWIFT. Transportation companies are enhancing their rail systems. The communication systems of payment providers are undergoing a reorganization. Assets can now be transferred across borders in a matter of seconds rather than days, thanks to liquidity providers using tokenization layers. Nearly everyone is unaware of how quickly the need for speedy liquidity channeling is growing. And XRP is unique among assets in that it was designed from the start to address just that issue. As a result, institutional investors are keeping an eye on infrastructure preparedness, settlement throughput, liquidity depth, compliance alignment, and price candles and charts in the cryptocurrency market. Additionally, XRP is situated squarely within the flow of improvements to global settlements in each of those categories. Knowing the distinction between structural demand and speculative demand is crucial. The demand for speculation rises and falls. It's fast-paced, narratively driven, and emotionally charged. Distinct is the structural requirement. It won't go away. You can see it coming. It has a practical use in helping financial institutions, payment processors, and liquidity providers with their issues. When international markets contract and then relax, structural demand is the one that increases. It is for this reason that the present configuration of XRP differs from earlier cycles. Institutional liquidity pipelines rather than retail momentum waves are now the central focus of the system's construction. Now add something that is seldom discussed to that, modeling the distribution of reserve funds by central banks. The 4 main criteria that central banks use to distribute reserves when rebalancing are stability, liquidity, interoperability, and settlement speed. Except for tokenized settlement railroads, crypto has never met these requirements. Even while central banks haven't come clean about their big XRP allocations, the frameworks they're developing, such as those for ISO compatibility, real-time settlement pilots, and tokenization experiments, are perfect for the kind of infrastructure that XRP is well suited to. Central banks don't just pick one asset at random. This means that systems that rely on assets with the ability to swiftly settle transactions, route payments, and provide liquidity are adopted. It makes no difference whether governments announce it or not. In that setting, XRP is part of the system. Your money is not being advised by this. Meanwhile, commercial banks are covertly getting ready for something even more massive: maximizing liquidity during trading sessions. Among all the world's financial functions, this is among the most valuable. Annually, banks invest billions into liquidity buffers for settlement windows. By streamlining digital settlement, they can cut costs significantly and free up a ton of money. It's precisely what XRP makes possible. Also, retail traders aren't driving demand as such platforms go live. It is a result of banks enhancing their balance sheets by several $billion. The public market is now unable to perceive the demand and volume that is amplified when even a small portion of that activity use XRP rails. Return to the here and now with all of this. Competition in the market is fierce. Money is being reestablished. Crunch time for volatility. Organizations are taking a stance. The activation rate of ETFs is unprecedented in the history of any asset class. Also, assets based on settlements and with clear regulations are rising to the top as a result of the current macro environment. All the pieces are fitting together perfectly. The upcoming advance of XRP does not resemble a typical altcoin rally because of such alignment. A structural reallocation of global liquidity appears to be taking place. Proceeding to the catalyst sequence is the next step, because most people fall behind at this stage of the cycle due to a lack of understanding of how institutional timing works. Many people keep an eye on price candles. Many establishments keep an eye on the sight lines. Liquidity, regulatory, settlement, and macro windows are important to them. Flows quicken when such windows align. Accelerated flows in a scarce asset cause price changes to be exponential. The four windows are converging in the same cycle for XRP, making it one of the rare digital assets to do so. First, there is the regulatory window. Clarity isn't going to be a headline for XRP at the present. It serves as a base. It is on this basis that ETF issuers are able to act swiftly. It's the key that unlocks settlement corridor experimentation for banks. It's the key that unlocks the door for institutions to risk exposure without fear of legal gray areas. The regulatory environment surrounding Bitcoin and Ethereum were unstable for several years, yet it didn't stop them from growing. XRP has already achieved clarity and is now undergoing its expansion phase. It changes the whole dynamic. Capital doesn't need to wait for clearance anymore. Everything is dependent on timing. The liquidity window is the second one. When the macro climate stops tightening and starts stabilizing, liquidity windows open. It takes time for that change to take place. Gradually, it reveals itself. Predictions about future rates shift. Fluctuations in market volatility, interest rates on government bonds level out, the currency markets are moving back into equilibrium. Growth assets regain their liquidity as those layers reorganize. However, speculative altcoins will not be prioritized in the flow of liquidity, unlike in previous cycles. It will go into assets with pre-existing settlement use cases via exchange-traded funds, ETFs. Unlike most altcoins, XRP has always had a unique liquidity profile. That distinction is becoming increasingly important now that it's entering a new structure. The infrastructure window is the third. The unsung hero is the infrastructure. There was a time when stories were the center of market cycles. They now center themselves on railroads, standards for tokenization, custody, settlement, and exchange-traded funds, ETFs. In the background, every single large bank is preparing to integrate digital assets. They have no interest in doing it for pleasure or retail speculation. The reason behind their actions is the fact that blockchain-based liquidity networks decrease friction, costs, and time. Whereas settlement mechanisms are considered antiquated, XRP has outperformed all other main assets in terms of testing, piloting, and integration into early settlement mechanisms. That puts it squarely in the middle of the window for infrastructure. The fourth one is the window for trading capital. This one is significant. Capital on a global scale is dynamic. First, it goes into stocks, then bonds, then commodities, then real estate, and finally, via controlled pipelines, it goes into digital assets. The magnitude of the figures becomes apparent when even a small portion of sovereign wealth funds' holdings are reallocated to digital settlement assets. This money is overseeing trillions. Tens of trillions more are under the control of pension funds. To top it all off, insurance firms, endowments, and asset managers handle much more. Even a small percentage of that flow going into digital asset ETFs would alter the whole structure of the market. Assets with the best settlement fit accelerate the most after that flow starts. That is the significance of supply dynamics. The amount of XRP in circulation has always been a mystery. Many fail to grasp the complexities of real market float because they fixate on the overall supply figure. The amount of XRP that is actually traded daily, known as its liquid float, is far smaller than what most people think. The liquid float will decrease significantly when issuers of exchange-traded funds start to accumulate for settlement products. One of the most potent pairings in the financial markets is low float combined with rising demand. This is the reason behind the steep price movement of equities that are subject to repurchase pressure. That's why commodities whose supply is limited see a dramatic increase in price when demand grows. True supply compression, along with institutional investment, has been unusual for cryptocurrencies. When that dynamic finally materializes, XRP will be among the first assets to benefit. Furthermore, liquidity is getting tighter, while the utility layer is getting bigger. All throughout the world, banks are putting real-time settlement corridors through their paces. One option being considered by payment companies is tokenized liquidity routing. In order to decrease capital lockup and increase speed, cross-border remittance businesses are updating their railroads. These enhancements aren't just words on paper. In the same time span as ETF inflows begin to scale, they are scheduled, funded, and tested. This is unprecedented for XRP and might lead to simultaneous market demand from both speculators and institutional investors. The psychological window also plays a role. Institutional validation of an asset causes a sea change in market psychology. Many people in the retail industry react emotionally. Organizations respond in a strategic manner. Layered inflow occurs when institutional investors join an asset via regulated means, and regular investors follow suit, creating momentum. The narratives of worldwide acceptance come after the retail momentum wave and the algorithmic trading money. Subsequent waves expand upon one another. They build upon one another, and in a constrained price structure, their stacking makes the breakout power much greater. The biggest market expansions don't happen slowly for that reason. They occur abruptly following extended durations of pressure accumulation. Throw everything into a blender. Every one of these things, clear regulations, stabilized liquidity, expanded infrastructure, institutional adoption, influx of exchange-traded funds, ETFs, compression of supply, integration of settlement processes, cross-border upgrades, macro alignment happens within the same time frame. This explains why the upcoming move isn't your average cryptocurrency rise. The hoopla behind altcoin rallies is real. XRP is situated at the core of the newly constructed multi-layered capital rotation event structure. It's unprecedented for XRP to embark on a cycle with all the necessary components. Established settlement infrastructure, open institutional rails, clear regulations, aligned ETF issuers, rotating global liquidity, and a debut timeframe defined by macro conditions. All factors that previously hindered XRP's growth have either disappeared or turned a corner, while all those that previously boosted its movement are now bolstering it even further. Since its inception, XRP has never before experienced such a well-coordinated alignment. For that reason, the evidence keeps pointing to a speed-up. For that reason, it is starting to be mentioned by institutional analysts. For that reason, the ETF calendar is jam-packed. Because of this, the market structure appears to be resting on a compressed spring.